clearly see since that banking crisis started, you just ripped up in Bitcoin. For me, this move up has been a great move up, but it's unproven. It hasn't made me say, okay, we're no longer in a bear market. But I'm very quick about it. I'm in and I'm out because overall I still view it as a bear market versus once we're in a bull, you let them run a little bit more. And you don't have that now. And that's kind of weird to me. And I don't know what to make of that, but it's one of those red flags that I'm just a little nervous about. I like to think that Bitcoin can withstand all of these things. I hope that the blockchain aspect of it really holds true. And again, that's the big question. And the biggest thing is really what we've seen in the last 2+ weeks, which is the banking crisis, right? So this banking crisis created, number one, if there's ever a reason to have something like a Bitcoin, the banking crisis proved it, right? So I love that from my long-term bullish perspective on Bitcoin and how I've believed in it for years as the digital gold. This just proved its point, right? The fact that banks are failing, fiat currency, bailouts, whatever you want to call it, and you have Bitcoin. And I think the beautiful thing about it is we've seen money flow from bank stocks and banks themselves going into Bitcoin and Ethereum. Now, it hasn't been so much into the alts. If you clearly see since that banking crisis started, you just ripped up in Bitcoin. And if you look at some of the other ones, like notice how Bitcoin's hitting a new high here over the last couple of days. But if you look at something like Solana, it's clearly has had a bounce, but it's not taking out the recent highs. So what that tells me is this is a run for what we call safety, which is in the crypto world, safety is Ethereum and Bitcoin, right? It's the safest cryptocurrencies out there, the least volatile if there is such a thing. And so that's kind of a cool thing because again, if you think about gold as gold, the digital gold as Bitcoin, that's exactly its purpose. My big question is we're up against the most monumental resistance level in the chart. Okay, so again, we've had resistance levels on the way up. We know that this was a resistance level right here. You can see we hammered it here and we fell back. But ultimately, this one is the most significant between 28,500 and about 30,500. This area to me is the biggest within this chart. And that's going all the way back to these highs. The reason it's the most significant is because it happens to be the mid-cycle bull low. So if we look at the bull market here, the M pattern, this was your lowest point. You consolidated right there and you broke down. So it makes sense that if Bitcoin is going to be really tested here, and it is, this is the level that it has to be to prove itself. Essentially what I'm saying here is that for me to believe that a low is in and the bull market is back and the bear market is over, we need to clear through this level and we need to hold above it for, let's say, a week. If we can do that, then for me, the lows are in for the cycle and we have to buy pullbacks at that point. For me, this move up has been a great move up, but it's unproven. It hasn't made me say, okay, we're no longer in a bear market. I mean, again, we've had a great rally, but if you look at that chart, we're still closer to the lows than the all-time highs on Bitcoin. And again, great move, but we're only at 28,000. We were at 69,000. So it's a good move from 15.6 or so to 28. We touched 29 yesterday, I believe. But yeah, it's unproven yet that it's really a new bull market. There's lots of games being played around options expiration with Bitcoin and stuff like that, where you'll see it get above just to stop people out and get people long, and then they'll whip it back down. So I really want to see it stay above for a good week. And then if that happens, you start to build a bull flag and potentially can go higher. One of the targets that I would look at would be a confluence of technicals, right? So if we do a Fibonacci retrace, what we can see, and we draw that fib from the 69 high, is number one, we're right at a 0.236 retrace right now. That's the level we're hammering on. What's fascinating is that we can see the 382 Fibonacci retrace is right around these lows right in here. So that would kind of draw my attention is when you have pivot points that match up with that fib. So it looks like 35.5 would be your next level after that. That would be quite a bit of resistance, this level up here. So those would be my next two big targets, 35.5 and 43,000. Now, for me, just a reminder, folks, is if we do hold above 30,000 or 30,500, it doesn't mean that all of a sudden I'm going to go all in, right? Basically, what it means is that we'll still get pullbacks, but we buy into support now. We start really buying that support level. So, for instance, if we get above 30,500 and we go to 35.5, then when it pulls back to, let's say, 28, I'm a buyer there. I'm a net buyer. If we pull back to, down to 25,000, I'm a net buyer at those levels. But I'm very quick about it. I'm in and I'm out because overall I still view it as a bear market versus once we're in a bull, you let them run a little bit more. And again, the charts are always right. So again, the charts are what the ultimate arbiter of truth or not is. But just to mention a couple things, like I still have never experienced a low in any bear market where we've had so much bullish sentiment in an asset. And that's concerning to me. I mean, it's uncharted territory for me. I still remember when we were at 10,000, even though we were up 200% off of the 3,500 low, people were still being like, no, this is too scary. Bitcoin's done. And you don't have that now. And that's kind of weird to me. And I don't know what to make of that, but it's one of those red flags that I'm just a little nervous about. The reaction in Bitcoin, to see Bitcoin actually respond, gives it validity to people that maybe were even questioning Bitcoin's relevance. Well, it's like, dude, look at the price action. Like banks are dropping 20, 30, 40, 50, 60, 80%. They're failing and Bitcoin was going up. So that really helps the long-term narrative. My bigger issue is that you're still seeing it like when we saw the stock market today collapsing intraday. So there was this period where we were up a lot and then all of a sudden we fell sharply before recovering at the end of the day. Bitcoin also fell during that period. So the bigger question for me is if the stock market does have another 25% down or 30% down, how does Bitcoin navigate that? The biggest takeaway was they said rates are going to stay high into 2024. So we're not going to get rate hike cuts unless there's like a catastrophic economic collapse, which would be bad anyways for risk assets. And the fact that rates are going to stay high for this long, it basically ensures that we're going to see a recession. So that means stock prices eventually have to come down. And the question is, can Bitcoin weather that storm during that period? So you might get up to that 30,000-ish Pierce level. We know that even numbers have a tendency also to kind of want to be tagged. There's psychological levels. So for me, it's there might be a little bit more upside, but for me, until we get above that 30,500 and stay there, I'm actually shorting Bitcoin into that level. So again, for me, it's all about when a resistance level is there, I believe in it until proven otherwise because it's resistance, right? I mean, so probabilities dictate there's more of a chance that it pulls back off of that level until it's proven otherwise. Same thing with supports. As long as you have a support there, you buy that support until it fails, essentially, right? If we all of a sudden see a bunch more bank failures, that would be a net positive for Bitcoin. My thinking is that the Fed will probably make sure that doesn't happen. They have their discount window open where basically these banks can go in, and they already have. They've borrowed like $100 billion plus out of the Fed right now just to shore themselves up. And the fact is that we've seen deposits above 250,000 guaranteed at the banks that have failed, right? So there's kind of this backstop that makes depositors not want to flee quite as quickly, which is good. So to me, it's like, yeah, maybe one more bank fails. FRC is one that's kind of on the teeter-totter of failing. But my guess is we won't see a lot fail. So I think that's the bigger risk case for me, is that I think if it's a bank collapse, Bitcoin does really, really well. If it's an overall economic slowdown, then does that get caught up in the kind of the risk trade? If you have a stock portfolio and you're using margin, if that drops 20% and you get a margin call, well, a lot of people don't like to take the losses. So what do? They sell somewhere else. They may take a little money out of their crypto account and get it over into their stock account. So you can kind of see it bleeding over into other assets in that way, and which is why a lot of these assets sell off together. So I like things that are falling knives. However, there's a difference between a falling knife and a potential catastrophic, Federal Reserve government takes over a bank and it basically goes to zero. So for me, I got caught in SBNY. I had a very small position, 1% of my portfolio. I said, you know what, let me gamble here. Let me roll the dice. Within a day, it was frozen. That's done. Basically the cycle goes, Fed pauses, that's the first thing. Then if the things get really bad, they start cutting rates. If cutting rates doesn't work and we get down towards zero, they start introducing quantitative easing again. Based on what the Fed says, and again, the Fed learned this lesson from Paul Volcker back in the 70s and 80s, where he started to cut rates too fast and then inflation roared back. And so Jerome Powell has been so specific on this, saying that, hey, we are not going to make that mistake. So right now, unless we get a catastrophic collapse in like an overall economic situation, it's unlikely that he'll cut or do QE anytime soon. Having said that, again, this is where it gets tricky, right? Because if we get in a situation where they have to do quantitative easing, I would be so scared about how bad the economy looks at that point. If inflation's 5 or 6%, whatever it is, and they start printing again, we're talking about like 20% inflation a year, which again, I mean, all of our bills would be going up 20%. I don't think any of us want to see that. So let's really hope that doesn't happen in the scheme of things, at least for quite a while, until inflation really comes down substantially. I like to think that Bitcoin can withstand all of these things. I hope that the blockchain aspect of it really holds true. And again, that's the big question. I wish I knew more about it. There's going to be technologies. Like the question is, does AI create any issues? Can AI be utilized to do nefarious things with crypto? The fact is, we're already seeing that happen within small periods, right? For instance, with the banking crisis, you've seen money flow in. Bitcoin's performed amazingly well. I look at it as making that switch once we really get clarity with regulation, right? So once there's transparency, once we know the rules that these cryptos have to play by, I think that's where you can actually see that full switch. Interestingly enough, once that happens, you'll probably get a bull run. But then keep in mind, it may start performing more like gold, which is not as volatile. And the problem with that then is that it creates a domino effect, right? And this is, to me, the banking stocks are the first domino to fall of something that's going to be much, much bigger. So I do think that this is just the first situation. I think that ultimately we're going to see losses on these banks' balance sheets that are astronomical. Right now, the Fed doesn't make them mark to market, so it doesn't affect them as much. But you'll see this trickle through the economy, right? And we're already seeing that with, like, everyone's saying, oh, jobs are still so good. Yeah, but you can't deny that every day you're hearing about another Fortune 500 company laying off 10,000 people or 9,000 people, right? So eventually that's going to trickle down to Main Street and the smaller businesses, which actually employ a lot more people, and that'll come through. So there's a chain reaction that has started here. I don't really think there's a way for them to stop it at this point unless they were to go back to money printing. But I think we as investors have to be ready for this. And it's not going to be an easy road. In fact, I think we could be in for a prolonged recession.